Okay, so thank you, Miles, and good afternoon to everyone. So some of you will have seen our webinar back in May, where we talked about an investment theme we thought was interesting and which GVF was taking advantage of. And at that time, we said we'd provide an update on how it played out. So we just wanted to take the opportunity today to do that. And just to say, actually, if by any chance you missed that presentation and would like to see it in full, there's a copy of it on the GVF website where it's currently on the homepage. So for those that didn't see it, what this theme was taking advantage of was a timing lag between what listed equity markets have done and what listed private equity funds report, a lag that we don't think the market fully prices in. GVF invested in this via UK listed private equity funds, and this is a very well established sector in the UK stock market. There are around 15 companies, most of which have been around for more than 10 years, and it includes several large liquid companies with market caps well in excess of $1 billion US. Now, a number of the companies in this sector are fund of funds, which means they hold a highly diversified portfolio with investments in lots of underlying private equity funds, managed by firms you may have heard of, the likes of KKR, Blackstone, Apollo, or leading venture capital firms that were the early stage investors in the likes of Facebook or Twitter. Now, over a very long time frame, we expect private equity to perform like listed equity. It is, after all, equity in private companies that face the same economic drivers as their listed counterparts. And in fact, you can see on this graph that taking three of the best known private equity funds over here, these have historically outperformed public equity markets over a reasonably long time frame. Now, just as an aside, actually, when we refer to listed equity markets, we're using the Russell 2000 here to represent these. And the Russell is a well-known index of mid-sized companies in the US, and it's more representative of the kind of companies private equity funds invest in. So that's the long-term picture. However, in the short term, there can be an interesting lag effect, we find. And there are two parts to this. The first and simplest to see is a simple timing lag. Generally speaking, private equity funds report on a quarterly basis, but it takes 2 to 3 months to publish these numbers. However, the listed funds that own private equity have to report NTAs to the market in the meantime, and often on a monthly basis. So what they do is report them based purely on what they know at the time, which can mean that the data is several months old. And as an example of this, most of the UK listed private equity funds, they've reported September NTAs, but these are almost entirely based on their end of June valuations. So the second thing is that we believe there could be a longer lag effect after particularly strong equity market performance. And this reflects private equity managers just being cautious in marking up their valuations. Combining both of these, the overall lag effect embedded in listed private equity, in effect, means you can sometimes invest in the market today, but at a level where the share market was several months ago. And this is what we did for GVF beginning at the start of the year. At various points this year, we've been able to buy into funds where we saw their real discounts to asset backing as high as 30% plus. And that's much wider than the actual reported discounts you saw at the time. Now, back in May, we highlighted 3 funds that, despite outperforming over the long term, as we showed in that first chart, had NTAs that have failed to keep pace with the listed equity markets over the more recent past. And in this next chart, if you look at where the red line is, you'll see a notable gap in performance between the listed equity markets, which is the dotted line at the top, and the funds. In fact, the funds had around 20 to 30 percentage points of underperformance versus the listed market, which had a phenomenal 6 months. What we expected to happen was that over the next 6 months to a year, the strong performance of equity markets would fully feed into the NTAs for these companies. And on the flip side, what we liked about these investments was that if global markets sold off, this lag would instead be a margin of safety, and their NTAs fall much less than the market. So just moving forward in time to the right of that red dotted line, we can see that the NTAs have since caught up, and in some cases overtaken listed markets as the final Q1 and Q2 private equity marks fed into the NTAs. Now for Q3, listed equity markets were down, and in the case of the Russell 2000, in US dollar terms, down 4%. However, and this supports the theory we've had about longer lags, the major US listed private equity managers recently announced their quarterly results. And in these, they provide some data on how the private equity funds they manage have performed. And what that gives us is a sample of the wider what the wider private equity market has done. What we've seen there, in contrast to listed equity markets, is consistent 5 to 10% gains over the quarter. So we're therefore expecting the NTAs of listed private equity funds to outperform listed equity markets by even more as this longer lag continues to feed through into the monthly numbers that are published in December. Now, to just look at how GVF's investments have done in this space, the bar charts here show how the investments GVF made have performed. These returns are net of trading costs, and they're stated in US dollar, which is how we think of the main currency risk in these companies. And just for a bit of context here, Fund B was an investment we made at the beginning of the year, Fund C was made in Q2, and Fund A was made midway through the year. Now, as you can see, they've generated good returns already, and this is over a period much less than a year. So on an annualized or IRR basis, the returns are much, much higher. So in summary, it's played out as we expected so far, and it's been a good experience for GVF. We do think, though, that there's more to come, and we look forward to updating everybody on it again.
But just to finish off, so thank you everyone for making some time and to say we're always here. So no question, big or small, is too much. Please email, call, or however you would like to get in touch.